I don't know if you have Nikhil of Nigania of Bernstein with us. Okay, let's go across to Nikhil Nigania. Nikhil, of course, tracks the power space very closely. Nikhil, good morning. Great to have you with us here on the program. Thank you very much. Prashant this side. It's always good to see you. So let's just start with the basic underlying, a power demand situation. We'll get drilled down to stocks, etc. Everything is corrected, obviously, from the highs. Power demand is up, as you point out, in the latest sort of short note that you've put out. But power prices, at least, especially on the spot level, are not. Could you just contextualize that for us?
For sure. So power demand actually is the heart of the sector. For any capex to happen, any growth to happen, renewable or thermal, power demand needs to come back. What we were seeing on power demand last 3 years, FY21 to 24, power demand was clocking 8-9% CAGR growth. Last year, second half, although the demand tapered down, January, for example, was just 2% power demand growth. And February, it's come back. So February, at least the first half, we see power demand grow 6.5%, which is a good thing, obviously, for the sector. On a long-term basis, we are not too bothered about these near-term fluctuations. We believe power demand should grow at 1x of a real GDP kind of a number, which is good enough for the sector to spend the kind of capex the government has envisaged. The second part you mentioned on spot prices, spot power prices are usually a good indicator of demand supply. So spot power prices, while still high, have come off a bit Y on Y. Reason being, we have good hydro generation this year, given the monsoons we had. Even wind speeds have been good in the first couple of months this calendar year, which is supporting wind generation as well. But that said, still spot prices are 10 rupees, which is the ceiling in the non-solar hours of the day, which is evening hours and early morning hours in India, which still tells you that we still have a tight situation of demand supply in the non-solar hours of the day.
Okay, all right. Hi, Nikhil. Good to see you. And Nikhil, just to confirm this power demand uptake that you're talking about, I believe it's not on a low base because the same time last year as well, we had roughly around 6% growth, right? So it's not a low base effect. It's actually strong demand, right? Just clearing that out of the way.
Absolutely. I think the first half of last calendar, the demand was quite good. So this is not on a low base. This is on a
okay, all right. Okay, all right. So if you're going to be bracing ourselves for stronger power demand, then those with higher merchant capacity will gain, right? So which are those companies that we should be looking forward to? I think JSW Energy in the past has mentioned Adani Power, if I'm not mistaken, as well. So how do you play this? Because some of them would be tied up, while the ones that have a higher amount of merchant sales could gain. So explain this to us.
Yeah, so see, power demand, the key impact is firstly on capex, right? The capex need for the sector. So long term, as I said, 1x of real GDP should continue to drive renewable capacity addition of 30-40 gigawatts a year, thermal addition of 8 gigawatts a year or so. For the merchant power plant, spot prices is of primary importance. So spot prices still high, but slightly off last year. So merchant power plants still better off than what they were, let's say, pre-COVID kind of a situation, when power prices used to be 3 rupees. They are averaging about 4.5 rupees in the spot market right now. But it could still, on a YOY basis, their realizations could be lower despite demand up due to spot prices being down.
Nikhil, just sort of for one quick question first, let's just understand where are spot prices now, and as we head into the peak season, summer, I mean, are there any estimates that you have already in terms of what is the elbow room? How much higher could spot prices surge because of this demand-supply issue that you just explained?
Correct. So spot prices are around 4.5 rupees on an average these days. They were even higher last year, February. I would expect them to be around 5 rupees, I think, last year, if I recall, this time. See, it's not possible easily to forecast spot prices. Many things come into play. Demand does change a lot with the weather, which is a big factor. But see, on a base case, we expect spot prices to be slightly lower this year than what they were last year. Given, as I said, hydro generation is good. And we have good amount of thermal capacity coming in the second half of this calendar year. So that could also taper down spot prices.
Okay. So we've discussed some of the basic fundamentals now, and now you have to put the whole valuation and price picture in it to decide what investors should do with stocks, right? The thing is that these stocks now are a good 25%, in some cases like JSW Energy, 40% off the peak, off the 52-week high. So are these comforting valuations given the increase in demand that you're talking about, or do you think there is still some risk buying power stocks at these levels?
Yeah, so if you look at valuations, we don't cover JSW, but we do cover NTPC, Power Grid. We cover some renewable players, Adani Green, Renew Energy. So we see favorable valuations more in the government-owned companies, which is NTPC, Power Grid, versus private utilities. Hence, our preference has been towards the government-owned utilities, especially NTPC being our top pick in the sector, to play a mix of thermal, renewable, and even nuclear as a trade in the power sector.
What about this renewable energy theme, Nikhil? How do you play it? Because that still appears there's plenty to be done on the renewable side of things. In the near term, some valuations got excessive. Some of those stocks have pulled back as well. So from the renewable energy basket, what do you like and how do you play it?
Yeah, so renewable energy basket, you can either play the developers or you can play equipment suppliers, could be wind equipment or could be solar equipment. See, I think what can't be denied is the growth in the renewable space. There's no denying that. So 30, 40 gigawatts a year is effectively a capex of almost 2 lakh crores every year. So no questions there. But the debate is on returns and on valuations, as you rightly said. On developers, I think the ROEs you make is not phenomenal. It's early teens kind of a return on equity these businesses make. And on equipment suppliers, wind, incrementally we are hearing challenges of land availability. Good large contiguous land parcels for wind is a big challenge. So as much as the expectations have been set, we think execution might not be that easy on the wind side. And on the solar equipment, we think right now, as a theme, they're having the time of their lives, right? US wants Indian modules. India has put in restrictions, and hence you have to use domestic modules and even domestic cells for schemes like rooftop solar. But the challenge we see there as well is it's a low barrier to entry business. So hence, over time, we see a risk of oversupply happening on the solar equipment space in India. So hence, so growth looks good, but returns, oversupply, some of those issues could impact the renewable space. And valuations are still rich. For most parts, can't comment specific stocks, but most parts in the renewable chain, valuations are still quite rich.
Does it? So in the RE space, nothing, right, Nikhil? You don't have a pick per se in that sense.
We don't. We play to our NTPC in our coverage.
Sure. Got that. Is it for an investor who's not sort of bound by this sector or that, or even just looking at utilities, etc.? Does it make sense to go down and look at wire and cables and transformers and the allied sort of ecosystem in that sense?
And transmission, if I could add to that.
Yeah.
No, absolutely. So we discussed, the broader demand. We discussed the renewable space. The third is the transmission space. So transmission is actually thematically, and even in terms of where we see massive capex happening, there are no doubts to it. Transmission is a big theme, not just in India. All across the world. Grid is becoming the bottleneck as demand accelerates and countries look to add renewable capacity. So grid is a bottleneck everywhere. Even in India, to add renewable, grid is becoming a big bottleneck apart from that. So transmission equipments, transmission as a theme, what we are quite confident is the capex will happen. And the other, sort of a positive factor to transmission capex, I would say, is even if demand slows down a bit, it hits transmission capex with quite a bit of a lag. So government will still have to build all the transmission they have planned, even if you see near-term slowdown in power demand. So it's from a capex building perspective, it's a lower risk play.
So, Nikhil, sorry, rushing you because we're going to be running into market opening. And since you're bullish on transmission, apart from Power Grid, any other plays? Some of the transmission equipment makers, maybe anything else apart from Power Grid? I don't know if you actually like Power Grid, but just tell us how you'd play transmission.
Yeah, we are positive on Power Grid. We are positive on L&T, which is obviously a broader EPC company, but transmission is also a decent part of their construction activities. Transmission equipment players specifically we don't cover, but within that we would expect the high voltage segment to be a better place to be at if you keep valuations at least from capex perspective and high barrier to entry. High voltage transmission is where we see the most positive as a theme.
Right, that's
HVDC orders. Yeah, we've heard that acronym so often in the last 3-4 months, right? And every time there's this HVDC order, stocks hit the roof. Hitachi, right? Hitachi Energy, of course, has been winning those orders in the BHEL consortium.
Stocks fallen, I think, from 16,000 odd. It fell to recently, last month, it fell to $8,000, 8,800 actually. it's back at about 12,000 rupees.
Yeah, I think the problem by HDFC earlier, only one order in every 5 years. Now you're seeing one, I think, every 1.5 or 2 years, or even less than that. So that's why that big spot.
Anything else, Nikhil, we should watch out for in terms of stocks or ideas or segments even?
No, largely that's it. I mean, so in terms of our preferences, NTPC is a top pick. We like Power Grid, we like L&T in construction. We also like power lenders, power sector specific lenders, but again, they are higher beta plays. So they are not defensive plays like an NTPC.
REC, PFC, etc. Thank you very much, Nikhil. A good conversation as always. Thank you very much for joining us with all of that. So that's the analysis from Bernstein coming in the power space.